quick little morning update on just the focusing position wise and the conviction short side again. Um, we obviously have a little bit of gap up here, and I kind of realized yesterday that when you take this short position off 632, you have to understand once. First of all, I've said this countless times, right? Um, we're gonna see, especially in a window of Vantage harm flows, like not such a vulnerable short-sided sequence. Yes, we filled the gap. Yes, we didn't pull in the peg. I think bi-weeklies from 632 down to low of day ran about 40%. But I think that it's a little speculative to build out a swing on bi-weeklies here. I mean, you have a pretty objective risk, pretty objective reward, but even just looking at the volume, there's not a lot of aggressiveness behind that seller. You have a lot of volume backing this hourly wick in this 15-minute anomaly print where there was a bid throughout this range. And even in Tuesday pre-market, we had a notable dark pool at 637, which is now being tapped in pre-market of today, Thursday's session. So that's why I prefaced very aggressively that you have to take your profits at your trailing stops and understand that maybe, first of all, the swing overnight on bi-weeklies is not super vulnerable. Second of all, the milking it into the in-wog is maybe a little bit speculative. And obviously that was the case. 632 is a bit, or 626, sorry, is a big spot. That's where we begin to previously see this distribution occur beginning on July 3rd. And we saw a pretty clean, about 1.5% to 2% move on the 15th and the 16th. Rallied, broke out internally and based this and continued to distribute into last week's kind of catalyzing reports, sparking this reversal. But it's like I said, this is going to take time. I now kind of think that if you want to take this trade, this is an intraday move off 632, and then the broader perspective of this range, you can justify the September position. But it's August expiration next week, CPI next week, VIX expiration on the 20th, not next Wednesday, but the Wednesday after. Those are the three big things that I'm going to really pay attention to. Nvidia report, the 27th. Within that window of weakness before September flows, those are the things that I'm going to pay attention to. The only focus of mine is SPY. I'm keeping a large eye on financials, consumers, energy, semiconductors, Mag 7 names, volatility, and a couple other factors to continue to have this conviction short side. But the only executable opportunity that I see on an options position is SPY. There's a January and in quarter one overall positioning here to target 600 to 580 to 564. There's a intraday position on Tuesday. I would have liked to see the INWOG. Obviously don't. But you have to scale appropriately in an environment and timing where we don't have such a clear cut objective kind of short-sighted opportunity. And I think that there's a September position developing. I think if you want to take some size off 632, that's completely there. But it's one of those positions that, like I said, I was a little wrong on being aggressive on a swing. I don't really like the swing much. We obviously base and fill the overnight gap and don't really see an aggressiveness behind any kind of seller, gap up, base, and break 632. So that's a big key factor. But I feel like the September position is potentially vulnerable here, right? Monitoring how we act within lower high range. Like I said, we have this notable dark pool that we're now fading in pre-market on SPY at 637. If we can continue to trade within the confines of this, I know I was a little overzealous in the INWOG, but we have a massive footprint to play with. We have a very volatile move and an aggressive gap up to begin the week. We have a big volatility spike of 50% from Thursday's high on the S&P 500 to low on Friday of 50% on vol. We're going to see some consolidation. UVXY put in the highest volume ever on Friday. Guess where the highest volume ever before that was? June 13th. There's a lot of things going on and added conviction. I still have short side. Continuing to monitor these things that are very important. And continuing to really only dial it in and focus on SPY as far as a position goes on options. Like I said, if we can get this, we can within this range see a seller. An inside week on an inside weekly bar would be very appealing to me, short side, and something that I would not stray away from. It's a lot of volatility that happened last week, so it's not necessarily super concerning to me to see an inside week put in. Um, but I'm gonna continue to have conviction short side. I kind of think that pivoting off of 632 into September puts is the more vulnerable sequence personally. That's just kind of how I view this um, overall, right? As far as the biweekly position being a little bit too aggressive, especially on a swing. But January position still focus. Kind of intra-month move, right? Like my focus for August is going to be a breakdown back to 613. Um, this short position would be to 626, 621, 618, 615, 613. And once we develop a like bearish divergence as far as volume and price action goes off of these previous highs, I think we'll crack back into that range into before quarter four, and we can begin to get aggressive short side. So that's my outlook on SPY and QQQ. Relatively the same thing. We don't see, I mean, we see some volume backing this daily print, but it's the same kind of anomaly within the intraday move on Tuesday session. The lack of follow through from sellers intraday as far as like structure goes, and kind of the fake out print for a continuation on Wednesday. But the potential for this to just be um, an INWOG inside week that we can continue to execute on September. I like SPY a little bit more. But yeah, I think this can definitely fail. I think within this range, excuse me, in the next week CPI, we can fail. We can break down. Losing 626 is pretty big. And then anything off of 613 as far as the lower high goes will be a major focus of mine. We have XLF pulling into the 5237 spot. Again, we're still in the confines of last week's 3.8% candle. This right here, I think, is going to be a big time catalyst for sparking a move. 5082 is a focus of mine. I could justify shorting this 100%. We're in golden pocket range, gap fill range. We don't really see a structurally sound bid throughout the entirety of this week. But I like SPY a little bit more. You can definitely short this here. We have the overnight gap to now deal with of about a little bit over 0.5%. 5237 is a big spot. It's going to more or less be a gauge for me, similar to like semiconductors, Mag 7 names. It's going to more or less be a gauge for me to kind of gather information and collect data on the broader risk on equity market. But definitely an underperforming name, especially with the gap on Monday being completely, weak, very weak, in my opinion. Like in comparison to how deep the gap is on SPY and QQQ and how we never really drew into it. This was not really a super like we broke in and filled this gap on Tuesday. So not a good look, but also, you can't short the hole, taking out these lows, sweeping the gap. If there's a short here on banks, it's probably an objective risk off 52, low 50s to mid 52s, low 52s to mid 52s, targeting back down to 51.30 to 50.80. But I want to get aggressive on banks later on when a lot of the individual equity kind of sets up, maybe. We're pulling into the Friday gap fill on JPM, so a pretty gross breakdown on Tuesday. And I mean, no good looks overall. Like Schwab looks very ugly. They just don't. I don't have a clean cut edge on financials right now. I don't have a clean cut edge on a lot. That's why my main focus is kind of SPY. So that's why I'm kind of laying off on the financial short until later on when it's a little bit of a better trade. And I think that'll happen. Like I said, I think we'll see a decline back to the previous highs in August. I think we'll potentially see a lower high put in September. And then into quarter four, I think we're going to see a decline in the beginning of quarter four in October to 580 to 564. And then we could potentially see those quarter four flows kick in and rally us into a lower high where we can short maybe down to 530. That's kind of a little bit of a ramble. It's a little bit speculative. I'm just playing what the tape is right now. I'm just kind of getting a gauge on what I see. I don't want to speculate on everything like that. I have my focus for August. I have my focus for the majority of quarter three, or the remainder of quarter three, and then I have my focus for the remainder of 2025. And they're all subject to change. My focus in August can change if we don't break down post expiration. My focus in the remainder of quarter three can change if we never retest those previous highs and this continues to top out. My focus for the remainder of the year can change if we do decline 10% into November, December. It all depends. I have conviction. I know where the opportunities lie. I know when I'm wrong, which I've talked about a lot. How to know when you're wrong. Semiconductors, right? We did this 283 spot. We saw the news after hours with the 100% tariff on chips, where we want more of a focus on American-made companies. Great, like that's a great thing. But we're seeing a lot of people try to buy that dip. There's a small move after hours. I think this is going to definitely spark a lot of kind of euphoria, especially in a lot of names like the Intel's potentially. Maybe not euphoria, but like a lot of people buying the news. Like we have Apple, which I'll discuss. We have TSM, which I'll discuss in a second. A lot of people kind of trying to buy the news, but this is our sixth daily test of 283, the July 2024 highs. Just all about waiting to break back into that range. I think this is going to be a big catalyst. I think semis have been a big outperformer, and I think it's going to really spark a move on just the technology sector as a whole, and that's going to kind of roll over into the entire equity market, as that's a very relevant sector and few holdings in the stock market. So that'll be something I continue to watch. Like I said with TSM, I mean we had a pretty fat gap to fill from the 15th. We from CPI. Wow, this actually outperformed on CPI really notably. And we have a gap above from Friday, and now we're seeing the pop after hours up 5%. Potential fill of that gap, potentially take out this earnings report high. I have no appeal for this chart, but I also have no edge yet. There's nothing for me quite yet on this chart at all. So I don't have much to say about this besides it's still a short side focus. There's still no true structurally sound chart or no true structurally sound range within this chart that are long. I think this visits sub 200 probably this year and the next, which is, I mean, from pre-market today, a little bit around an 18 to 20% decline. I would not be surprised, but I have no edge quite yet. I'm not shorting this. It's just wait to crack back in that range to develop appealing structure. Apple. This right here is the most appealing look in the world. We get the gap up, the fade onto the report, and essentially what's developing here, in my opinion, is more than likely a path of least resistance. Because when you think about just the tests, 1, 2, 3, 4 different like weekly tests of this 213 spot with the remainder of April 3rd's gap to fill. This report can offer you a nasty little fake out candle where we have a gap up, we have a lot of selling happen, we have a larger bidder take opportunity of those late sellers and absorb the supply at 213. That seller bails, pulls his ask, moves it to 224, and we can see a lot of this supply absorbed. We can see the breakout, and maybe this can give you a fake breakout where we sweep these highs, change these hands, offload inventory, fill the gap, whatnot, and then we break down. This was an ugly report, print off the report. I wanted this at 224 off the report. We didn't get it. Thought maybe it might not need it. Now I can kind of see what's developing, and we have, they were obviously bidding the NWOG as well. There's a clean short of the progression gap on Monday, but 224 is the focus. The 200-day, the 618, the gap fill, all taking out these highs, setting up a massive sweep and change of hands, and it's just going to be a very aggressive follow through, in my opinion. This is something right here. You can short from 224 back to 213 on September positioning when we reach that, probably next week. This is going to be a short focus. That's how easy this should move, just because of the campaign established here, in my opinion. So, big time look on Apple. Big time focus on Apple. AMD, highest volume since the January distribution in 2024. Not surprised. NVIDIA, I mean, this is like two little inside bars. We'll see how we act within this confines of this July 31st print. I mean, but that's really it. XLP with the 1.5% candle yesterday. Really clean kicker candle, right? Really clean pop on consumer staples. This is a big red flag overall that a lot of people don't understand. We have seen the rotations, we've seen the underperformance, we see the money flow out from the outperformers and the laggers, especially when we have this dispersion happen in the individual constituents of the S&P 500, and we have this kind of lack of correlation and stagnant price action in the indexes. Things pull away from each other. We're now seeing those things kind of flip and things kind of profit taking, and then opportunity on the underperformers, which happens to be these risk off consumer names. So this is a really clean pop yesterday. I'm going to keep a big time focus on this. And then I still like Energy Commons on ZOM specifically, with a $2 to $3 risk for a $10 to $11 reward. But monitoring these lows being taken out, the golden pocket, this gap to be filled below as well is pretty big. A 2% day, about a 1% gap. So we'll continue to focus on that as a commons position, but nothing options wise yet. So that's pretty much it. SPY is my main focus for now on options. I do like September positioning here. I have to understand that you have to be pretty cautious with your exposure in terms of next week probably being what sparks the reversal. Not surprised if we see an inside bar this week. I was a little bit overzealous in the 632 position. I now kind of realize why that was a little bit too early. Obviously, like I said, de-risk, trim, and set your trailing stops within that range appropriately. So that should not have been a losing trade. But nonetheless, understanding the window. So not surprised if we see an inside week with volatility, with what happens next week. Keeping a focus on consumer staples, financials, semiconductors, Mag 7 names, Apple specifically, at a big time spot with a big time potential path of least resistance. But that path of least resistance potentially sparking what could be a massive change of hands and kind of sweep of these gap fill and whatnot. So it's going to be a big time tape at 224 on Apple, and monitoring XLF as well as a big time name and a big time catalyst, right? So would not be surprised if this gap is kind of sold off, if we maybe put in an exhaustive daily candle. I would be a little bit surprised if we broke out above last week's high. That would be a little bit of a surprise to me. And I would also be surprised if that happened and it's stuck. So that's going to be what I'm kind of looking at this week. Probably would be pretty patient with any additions to the September positioning and the January. Just waiting, right? Like I said, volatility compression is not unwarranted within the sequence with how it moves. Patience is necessary. Window timing is important as well, and understanding as well just structure. I mean, this looked good, but you have to understand just the lack of aggressiveness behind that seller and the intraday perspective on the Tuesday candle. So, quick little update. Basically, just potential for an inside week, volatility compression, big time names and sequences I'm watching to continue to convict my short-sided position thesis, and why I think risk-off names as well will outperform. I mean, we have a really nice print on XLP. There's no clear edge here, and this is a really unappealing sector to trade, but an underperformer seeing notable bidding throughout this range is very concerning for the risk on equity market. It's very concerning, right? So I will say that myself. I have a lot of confidence in that as well. Just things I've seen before. It's all about, creating a mental vault. This was a sick path of least resistance on Walmart to the gap fill. It's all about creating a mental vault of things that you've seen before and sequences and using that to your advantage when you see the same opportunities arise again. It's the same thing that happens in the stock market, just different names, different prices, different times. So yeah, just a quick little update. Good luck, have fun.